It was a Friday morning like any other, until you checked your phone. The screen was a sea of green, stock market futures were soaring, and Bitcoin was suddenly up 7%. What triggered this surge? The answer? A speech from Federal Reserve Chairman Jerome Powell at the Jackson Hole Economic Symposium. Powell's carefully chosen words signaled a major shift. After years of high interest rates, relief was finally on the horizon. This wasn't just Wall Street news. It was a message for every American family feeling the squeeze of expensive loans and mortgages. Powell's speech was the first clear sign that the Fed was preparing to ease up, offering hope for lower borrowing costs. The market's reaction was immediate, but the real story is what comes next. How does a speech in Wyoming affect your mortgage, your student loan, or your small business? Understanding this connection is key to making smart financial moves in the weeks ahead. The financial world just changed. Now it's time to see how it will change your world. Let's break it down. Jerome Powell, as Fed chair, holds the economy's steering wheel. For years, he kept his foot on the brake, raising rates to fight inflation. But at Jackson Hole, Powell signaled a pivot. The risks to jobs and growth are rising, and the Fed is ready to adjust. For market watchers, this was a bombshell. Clear language that rate cuts are on the table. This wasn't a whim, but a response to shifting data and growing economic risks. Powell's speech was a tactical move to prepare the public and markets for change without causing panic. He told business owners, banks, and families, the era of ever-increasing borrowing costs is likely ending. This rare, direct guidance from the Fed was meant to boost confidence and signal relief ahead. The message cautious optimism, with the full weight of the central bank behind it. The financial world listened and responded instantly. Now, the rest of us need to pay attention too. Why did Powell act now? Because cracks are forming in the economy's foundation. Job growth is slowing, unemployment is ticking up, and the Fed's own research shows these are early warning signs of recession. Powell's speech was a preemptive strike act now to support jobs, but don't reignite inflation. It's a delicate balance. Inflation is still above target, but the threat of a credit crunch is growing. Banks are tightening lending, the sharpest pullback since 2009. When banks stop lending, businesses stop expanding, and consumers stop spending. The Fed saw this and knew it was time to act before things got worse. The goal eased just enough to keep the economy moving, without letting prices spiral. It's a high-stakes balancing act, and the Fed is trying to thread the needle. The next moves will shape the economy and your wallet for months to come. That's why this moment matters. A Fed rate cut isn't just Wall Street news, it hits home. For homeowners, even a 0.5% drop in mortgage rates can mean saving hundreds each month. Small business owners can borrow more affordably, fueling growth and jobs. Student loan borrowers may see lower rates, freeing up cash for other needs. Even savers are affected. High-yield savings rates will likely fall, so now's the time to lock in those returns. Every Fed move ripples through your budget, from your mortgage to your savings account. The bottom line, a rate cut can put real money back in your pocket, or take away opportunities if you're not prepared. The time to act is before the window closes. Don't wait for headlines. Make your financial moves now. The Fed's decision is your opportunity. Not all borrowing gets cheaper overnight. Credit card rates are tied to the Fed, but the relief is tiny. A quarter-point cut barely dents a 22% APR. Lenders keep big margins, especially for those with lower credit scores. If your credit isn't strong, you might not see any drop at all. Banks may use economic uncertainty to keep rates high for riskier borrowers. The real solution? Pay down high-interest debt now. A Fed cut is a small tailwind, but you still have to do the hard work. Manage your expectations. A rate cut won't erase credit card debt. The best interest rate is the one you never have to pay. Use this moment to double down on paying off balances. Powell's speech triggered a classic risk-on rally. Stocks and crypto surged. Lower rates make investors more willing to take risks, moving money from safe assets to stocks and digital currencies. For tech stocks, lower rates boost valuations and make borrowing cheaper for buybacks. Crypto's jump shows how quickly optimism can return when money gets cheaper. But caution is key. Regulatory risks and volatility remain, especially in crypto. Venture capital is also waking up. Startups may soon find funding easier to secure. A Fed rate cut can fuel innovation and growth, but it's not a guarantee. Don't get swept up in the hype. Invest with discipline. The rally is real, but so are the risks. Stay focused on your long-term plan. Optimism is high, but risks are everywhere. The biggest danger: stagflation, weak growth, and high inflation. If the Fed cuts too soon, prices could spiral while the economy stalls. Markets may be overreacting. If the Fed disappoints, stocks could drop sharply. The Fed is also shrinking its massive bond portfolio, adding another layer of uncertainty. This dual approach, cutting rates while tightening elsewhere, has a mixed track record. Don't expect miracles. A rate cut won't fix supply chains, federal debt, or create instant jobs. The Fed steers the ship, but can't control the tides. Every family needs a plan that doesn't rely on the Fed getting everything right. Stay alert, stay flexible, and don't bet the farm on a single policy move. Cautious optimism is the best strategy. History shows that Fed pivots create winners and losers. The winners act fast, like homeowners who refinanced in 2020 and locked in low rates. Business owners who secured cheap credit grew, while others hesitated and missed out. Inaction is often the most expensive choice. Smart borrowers use rate cuts to pay down debt faster, saving thousands in interest. The losers? Those who chase hype or gamble on risky assets, only to get burned in the next correction. Every cycle, the lesson is the same. Use Fed moves to strengthen your finances, not to speculate wildly. Refinance, lock in savings, and stick to your plan. Don't get caught up in euphoria. Discipline wins every time. The Fed's actions are a signal, not a guarantee. Make them work for you. The Fed's signal is your call to action. If your mortgage rate is high, start the refinancing process now. Be ready to lock in savings. Move idle cash into high-yield accounts or CDs before rates drop. Review your investments, rebalance, take profits if needed, and avoid chasing hot trends. Don't invest money you can't afford to lose in speculative assets. Teach your family about interest rates and why they matter. Financial literacy is a gift that pays for life. The Fed and the economy create opportunities, but you control your destiny. Take deliberate steps today to protect your finances and build a secure future. Don't wait for perfect conditions. Act while the window is open. Turn this moment of change into your personal victory.